Late last week, we had Zimbabwe win its biggest foreign investment in a decade, that with a $750 million steel deal between Zisco Steel and the Essar Group of India. But this seems to have confused the rules around indigenization a bit. How are you reading this new development?
Good morning. Indeed, there is confusion as to exactly what the indigenization and empowerment rules are all about. On the one hand, the Act is very clear that any foreign investor should have at least 49% stake in a company. But in this deal, we foresee the government ceding 54% of Zisco Steel to Essar Africa Holdings, which flies into the face of the indigenization policy. And this is not the first deal where we have seen government ceding more shareholding than what is required by the law. Last year in September, EcoBank invested and acquired 70% shareholding in Premier Bank after they injected $10 million to recapitalize the merchant bank. So it's not clear now exactly which way the indigenization policy is going. Do you see this changing the rules of engagement, so to speak? Not really. Not really. It seems as if government is cherry picking foreigners to do business without following the indigenization rules. For example, the minister last week made it very clear that the Chinese companies will be exempted from these indigenization rules. So they are cherry picking. It's not that they are broadening the engagement. What about the impact this is said to have on foreign investor sentiment? Because surely it sets now some kind of precedent in terms of if the price tag is big enough, a deal can swing in foreign investor favor. Could that be a new the beginning of positive sentiment starting to surface once more? No, in my view, most investors will remain fence-sitting, because it's not really clear what exactly the government want to achieve with indigenization. On the one hand, the very same week when the Zimbabwe government is signing one of its biggest deals, US $750 million, the same government is telling the world that they, instead of wealth creation or wealth empowerment, they want to grab companies like Neso, Barclays Bank, Stanchart. So they are sending different signals to the same investors. What do you see the Zisco deal actually achieving, where we've got government, as you say, cherry-picking organizations? This is an organization or a company that's now being revived. What do you see it spelling for economic growth in the country as a steel maker? Yeah, this is before the company went under. It was the only steel maker in the country, and as a result, Zimbabwe's industry is relying on importing steel from abroad, mainly from South Africa. But if Zisco Steel is revived, we are going to see a major expansion, local industry getting steel easily, and it will be accessible. And we expect also exports into markets like Zambia and Mozambique, where there's construction is at the highest level at the present moment. So I foresee foreign currency earnings coming from the selling of steel in Southern Africa. Of course, this all comes on the back of a Euro Money conference that was held in the country last week. And at that conference, we still had Zimbabwe rank as amongst the riskiest destinations to do business in Africa. At the same time, there was some rumoring and speculation around the return of the Zimbabwean dollar. And, that it would gain legal tender once again. Run us through some of the commentary that government has in turn come back with to that speculation. The Minister of Finance, Tendai Biti, told the conference that he don't foresee in the foreseeable future the return of the Zimbabwe dollar. His argument was simply that we have to grow this economy to $15 billion if the Zimbabwe dollar has to return. And for us to grow this economy to 15 billion, it will take us some years. For example, our GDP last year, I think it was stood at about 5.3 billion, and is expected to go up to 9 billion by the end of this year. So to reach 15 billion, it will take us some time, and I don't see the Zimbabwe dollar coming anytime soon.
In the meantime, run us through the kind of consumer recovery we're seeing on that end, because while we talk about, indigenization laws and the fact that things are pretty uncertain at this stage, we've seen big South African retailing groups, the likes of a Pick n Pay, having increased its stake in local stores to 49%. South Africa's SPAR has also expanded its presence there, and we've even had Investec upping its stake in OK Zimbabwe stores. So that consumer story must be an enticing one.
Yeah. There is really is very attractive. In fact, there is a saying that you have to invest in Zimbabwe now because it will be easier for you to get returns in the future. And in the retail, basically, consumption of basic commodities is spurring investment into the consumer market.